Is everybody having a great morning so far? Let's go ahead and click right off to the fun stuff. Go ahead and take a quick moment and read all this gobbledygook from our friends from the regulatory governing bodies that they require us to share. Past performance does not necessarily indicate a future results. There's substantial risk of loss associated with trading securities, options, futures, Forex. Only risk capital should be used to trade. You can lose money in trading. So while you're reading all of this, please do me a quick favor. Tell me where everybody's from. Like to see who I'm talking to. I'm sure you may have already done this exercise. Like to see who I'm talking to in the world. All right, thanks, David. Chicago, Australia, Nashville, Dallas, Michigan, Peru, Tampa, Ontario, New York, UK, Atlanta, Kansas City, London, Pensacola, Florida. People from all over the world, Louisiana, Niagara Falls, Ecuador, England, Kentucky. Man, that's amazing. All right, cool. The power of technology. All right, so I'll introduce myself again. In my journey as a trader, again, my name is Silas Peters. I'm a proud husband and father of these two little blue-eyed, blonde-haired girls that are bebopping around downstairs on this Saturday morning. After I graduated there from my alma mater at the University of Alabama, about 3 days after graduation, I drove up, packed up my small belongings from Tuscaloosa, Alabama, drove up to the Windy City and started working at the Chicago Board of Trade. It started on a global trading desk, working on an institutional commodity-based hedge fund desk where we were trading for the commodity-owned fund, banks, CTAs, institutions, other large floor traders. And that is really where I cut my teeth in the commodity markets at the Board of Trade and really never looked back. Since then, I've been involved in building and managing several futures and equity brokerage firms, broker-dealers. I hold or have held these licenses here, whether you care or not. And in 2016, I launched Seasonal Swing Trader. So is this what your trading desk looks like? It certainly does not look like mine. I found this picture on the internet and I thought it was funny. Had to include it in the slides because I feel like a lot of people that I talk to, at least, you know, my friends and family, still have no clue what I do for a living. It's very hard to explain, but this is kind of, I think, or what I feel that they envision, that I sit around and look at all these squiggly lines and watch CNBC all day and things like that. Certainly not the case, but I thought I'd just include that in here for a little funny. But of course, it's just not necessary. I think you would go crazy if you would look at that. And I actually did. I worked at several desks where that was kind of my job and what I looked at on day to day. And needless to say that I now wear glasses or contacts and I carry plenty of eye drops. So you don't need all this. It's not necessary. And the theme that I'm going to try to emphasize today is just the KISS principle. Keep it simple, and we should all be much better off. So paralysis analysis, kind of going back on the previous slide. Are you a victim of paralysis analysis? Raise your virtual hand. Are you a victim? I was a victim. Per Wikipedia, paralysis analysis is the state of overanalyzing or overthinking a situation so a decision or action is never taken, in effect paralyzing the outcome. So I've been a victim. Trust me, I've seen all of the widgets, gadgets, zing zang, indicators, lines crossing, all that stuff on the right. And an indicator junkie is what we call them, indicator crackhead. I love indicators, but at the end of the day, you go back and look at the simplicity and just try to simplify. And I'm going to show you plenty of examples on why none of that's needed. So if it is for you, then good deal. All right, so what do you trade? Again, I like to see where everybody is from. I like to know where everybody trades. Do you trade stocks, ETFs, options, futures, Forex, crypto, any or all of the above? Can I see what everybody's trading? All right, stocks, options, Forex, futures. We got a Forex and futures and stocks. All right, a little bit of all of the above. No crypto yet. So I want to do a poll here, but I'm afraid that I would screw something up and shut the presentation down. So I just wanted to see what if you just can type in. I got all kinds of answers flying in, and I trade it all. I really do. I trade stocks, options, futures, and Forex. I do not trade. I'm not an active trader in cryptocurrency. I am quote unquote invested in cryptocurrency, but who in the hell knows what's going on there, where that's going to end up. Maybe I'll log into my crypto accounts one day and find out I paid for my kids' college education. I don't know. It's kind of my one ticket to Brazil type trade. So again, regardless of what you trade, what we're going to go through is I'm going to show you how it works on all markets. All right, I've got more good news. What I'm going to share with you today is highly accurate. It's highly profitable, works in all markets, works in all time frames, and it's about 99% mechanical. And most importantly, it's simple. So why are you here? You're here to learn my mechanical done-for-you strategy for all markets, all time frames. So let's go ahead and dive right in. So my agenda and my promise to you, I said it earlier, I'm going to keep it simple. We're going to learn a simple and very mechanical setup that is repeatable regardless of the market or regardless of the time frame. So whether you're a swing trader, tick trader, position trader, etc., you're going to find something that's going to be worth your while. All right, so the setup responsible for the equity curve below since the inception of seasonal swing trader is boom, 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 the 1, 2, 3 pattern, the 1, 2, 3 pattern, or the 1, 2, 3 top and bottom. Can I see who is familiar? Is anybody familiar with the 1, 2, 3 pattern? Who has heard of the 1, 2, 3 top and bottom pattern? All right, so a lot of you seen lots of yeses and surprisingly some no's, but we're going to go through it. Don't worry. This is one of the most fundamental technical patterns probably in the book, and it is highly accurate, and I would equally say highly overlooked by most traders. I've known about this pattern for probably 15 years, used it a lot, got distracted, got put on the shelf, and then I went back and said, why? What am I doing? Went back to it, and it's about the only thing that I use. One of my top 2 or 3 patterns. So the setup, we're going to go through the very basic mechanics, no sweat, and we're going to go through lots of chart examples. So the setup, price action based, don't need any indicators. The pattern is comprised of a low, a higher high, then a higher low, and a break of that higher high in the instance that we're going long. Completely inverse if short, complete opposite if we're going short. It anticipates a change in the trend from up to down on a break below the number 2 or B point. It anticipates a change in trend from down to up on a break above the number 2 or the B point. Generally speaking, the more bars it takes to complete the pattern, the bigger the move. Price action is king, that's right. So the strategy, it usually occurs at the end of trends and swings. It can be an indication of a change in trend. It can also be found within the trading range, and we'll kind of go through some of those. It works extremely well, and I want to emphasize that it works extremely well when the pattern sets up at important support and resistance levels, head and shoulders, tops and bottoms, you know, these other high probability chart patterns. So let's look at the basic mechanics. And so the strategy, again, for a 1, 2, 3 top, we're simply looking for new highs or new lows. Now, forget about what chart this is or what time frame. It doesn't really matter. So point 1 is the highest high during the session that you're looking at, whether it's a 5-minute, 15, daily, etc. So we're looking for new highs. When the market pulls back down, stops trading lower, and then retraces higher, we get our 1, 2, 3. So point 2 is the new low point. As forms the support, we retrace higher, we get our number 3, and then when price breaks down below the number 2 point, that is our trigger entry. That's our indication to get short. All right, the 1, 2, 3 bottom, as you would expect, it's the complete opposite. So point 1 is the lowest low point here, forming our support level. The market trades higher. We stop trading higher. We pull back. We have our number 2. We pull back down. We stop making new lows, giving us our number 3. 1, 2, 3. Now, I don't know what happened in this particular example, but it trades sideways. But the most important thing, and we're going to get to this, is we automatically know what? We know our entry point, break above the number 2. We know our stop, the initial risk, is going to be below the number 1 point or the number 3. And we know our target. And we hadn't talked about targets yet. All right, so who wants to look at some charts? Let's just go right into charts. I'm kind of a visual person, and seeing is believing, as they say. So stick with me. The 1, 2, 3 pattern top. This is a daily chart on the Australian dollar, ticker symbol 6A, or FXA if you want to look at the ETF. Here we have a daily chart, and when we're looking at a daily chart, the highest probability setup using the 1, 2, 3 is a 52-week high or 52-week low, in an instance for a 1, 2, 3 bottom. So here we have a new 52-week high. All right, the prices move lower, stop moving lower, retraces higher. We have a very shallow retracement here. The market could retrace all the way up here. As long as we don't take out the number 1, we're looking for our number 3. Once we stop making new highs, pull back down, we have a 1, 2, 3. Okay. The market then breaks down below the number 2 support area. And once we break down below and close below, we get our short entry. This pattern reached its profit objective within approximately 10 days, 225 points or ticks, $2,250 per contract. So let's look at another top pattern here. This is a daily chart of Walmart, ticker symbol WMT. Makes a new 52-week high. Prices move lower. We stop here at support, number 2. We pull back up, 1, 2, 3. 1, 2, 3. Market trades down, breaks below the number 2, closes below the number 2 point. We get short, market pulls back, gives us a little bit of heat, and the market reaches the profit objective within about 1 month. Good. The target was $5 or $500 per 100 shares. How do we know that? It's the distance between the 1 and the number 2 point. So let's say this was $45 and this is $40. That's $5. We take that $5 difference, subtract it from here, $35. It's actually $98 or something. But my point is the initial target is the distance between the 1 and 2. And I encourage you, don't leave me right now, but I encourage you after the presentation, go look at charts. I don't care if you're trading Forex, cryptocurrency, stocks, ETFs, futures, go look. You're going to find these things everywhere, and it's uncanny how often these set up, and more uncanny how often they actually hit the target objective. And what happens when they hit the target objective? A lot of times they reverse. I don't think that's by coincidence. So let's look at the 1, 2, 3 pattern, the bottom. Hopefully you're getting this by now. The 1, 2, 3 pattern bottom chart, again, showing you it works on any time frame. 15-minute chart of the E-mini S&P. We have a new session low, the number 1 point. We give a new session low right here. Market pulls back up. We stop making new highs. We pull back down, another shallow retracement, 1, 2, 3. What do? We sit on our hands and wait. We don't get mouse happy. We don't get trigger happy or click happy. We wait for a break above the number 2. Now, aggressive traders can take the initial breakout. So you put a buy stop above the number 2 high by maybe a tick or 2, and you can get long. That's the more aggressive entry, the more riskier entry. A more conservative or prudent strategy would be for confirmation, wait for the bar to break above and get a close, and then put resting limit orders back at the breakout level. So that's exactly what you did. You got a couple of retests, the market came back, gave you a little bit of heat, the market zips higher and reaches its target objective, 20 points or $1,000 per contract. Let's look at another 1, 2, 3 bottom, 1, 2, 3 pattern bottom weekly chart on Apple. Weekly chart on Apple. So we've got 1, 2, 3. Also could call this a nice double bottom. Put in a new multi-week low. Multi-week low here. So we have a 1, 2, 3. The market breaks above and closes pretty strongly here above the number 2. You say, uh-oh, well, I missed this move. No, not exactly. You be patient. The market pulls back down, gives you a couple of retests here, 1, 2, couple of retests. You can even get long here, and the market moves $12 or $1,200 per 100 shares. And really, folks, trading off the daily and weekly charts are the way to, really just a hell of a way to catch some serious moves, to do some position trading, and how to manage longer term portfolios. You won't miss the major moves. And how do we trade these? You know, there's so many ways, regardless of your account size or style. You know, selling out of the money put spreads in the case for a bullish position, buying, you know, at the money calls, call spreads, longer term out, buying the stock. You know, it really just depends on how you like to slice it. All right, so and again, remember what I said, when we have multiple patterns in addition to the 1, 2, 3, for instance, we have this double bottom pattern, so that's extra confirmation. All right. 1, 2, 3 pattern failed trades. Uh-oh, they don't all work. No holy grail. Sorry to ruin your Saturday. They don't all work. No trading strategy does. You don't need me to tell you that. So don't leave me. This is a 5-minute S&P chart. 1, 2, 3 new session highs. And what I mean by session highs, for, you know, again, it's up to the individual trader, but on intraday trading using this method, I look at the session highs and session lows going back to the Globex session. So that's 5 p.m. Central my time. So going back to when the Globex session opens, I'm looking for new session highs, new session lows, and we're going to look at some examples. Hopefully, if I have some time. Some of you may prefer to only look back at the London Open, or if you're later in the day, you may want to start from the New York session. It really doesn't matter. I like to encapsulate what happened throughout the evening, Globex session, the Asian session, London session, so on and so forth. All right. So, and then this is what I call the no trigger. Not good, not bad. It's just what it is, a no trigger. That means we didn't get long, no harm, no foul. So here, what happens, we have a new session low, number 1, we trade back up, we have a number 2, 1, 2, 3, looks like a really nice quality setup. Market just kind of drifts around. We're just sitting here. We're waiting to get long, right? The market breaks down. We take out the number 1 low. All right, what happens? The pattern is voided. Pattern's voided. We start a new count. Boom, 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 boom. We stop making new lows. We get a new number 1. 1, 2, 3. All right, we're getting excited again to get long. We've got a little trend line action, so we're liking a long setup. Market trades around. Uh-oh, boom, takes out the low here. We start the count over. That's fine. That's all cool, because what this is markets telling us it doesn't want to go higher. It's moving its way lower and probably giving us a better value buy, right? And you start adding things like some other, you know, if you want to add some other indicators and things like that, look for divergence. That's when we get some really high probability setups. So we have a new low, 1, 2, 3. The market triggers higher. Actually, market triggers higher on this bar, this bar. Market pulls back, gets you long, so you get long here at that trade. All right. So follow me, everybody follow me. All right, how do we manage the trade? Again, entry is pretty simple, right? Confirmation of entry is on a break above the number 2 point to get long, or a break below the number 2 point for short positions. Exit strategies, you know, obviously we can make this as complicated as we want, but the initial target, and you know, it's very important. At least, you know, I've traded this pattern hundreds of times. The distance between the number 1 and the number 2 point is my initial target, bar none. Very simple. Other exit points, you're trading multiple contracts, is the 50% retracement level. Significant support and resistance, you know, keeping along with the price action principle and price action strategies. Support and resistance is king. You know, it's kind of the basic charting 101, looking at support and resistance. It's, you know, it's true, it works. Trail the market using your preferred methods. Trend line analysis, 2 to 3 bar candle stop, moving averages, par, SAR, Fibonacci numbers, etc. Trend line analysis and support and resistance are really my favorite. You know, connecting at least three bar high, 3 bar lows on trend lines, and just tracking the market. Now, if we get really large extended moves, you get some of those where the market really takes off and you get some runners in your direction, you may want to trail it up, you know, by a couple candles or whatever works for you. All right, so again, I told you the setup works on any market, whether you're trading pips, Pepsi, potash, or pot stocks, pork bellies. Unfortunately, pork bellies are delisted from the CME. Can't trade those anymore. Or the Polish zloty. Doesn't matter. Type in your favorite symbols. Go to your favorite time frame. You're going to see those puppies setting up anywhere. Told you it works on any time frame. Tick, 5-minute, 15-minute, hourly, 240, or the 4-hour, daily, weekly, monthly, yearly. Again, whatever your preference is. Any trading style. Are you a position trader? Are you a swing trader, scalp trader, or tick trader? Doesn't matter. It doesn't matter. But you have to find what your bread and butter is. My bread and butter is really the trading off the end of day charts or the daily charts. Also the 4-hour, I like the 4-hour for swing trading FX. I really like to trade the 4-hour for Forex. And then when I do day trade, I like the 5-minute. And I'm going to show you some pretty exciting things that happened on Friday and yesterday, Friday 2/8, in the S&P and crude oil and euro. And the 5-minute works really well. It just continues to work on the S&P, crude oil, really anything that moves, like the S&P, crude oil, 30-year bonds, some of the currencies. And then if you want to look at some longer term position type trading, the weekly is good. But if you want to do, you know, the tick chart or Rinko chart or 30-minute, that's all good. All right, so you've seen the proof. Let's view some real trade examples. Who wants to view some real trade examples? Everybody follow me this far. I hope I haven't lost anybody. How many more examples do you need to see? All right, this is where it gets fun. So this is real market environment. These are trades that we used in our service, took in our service. Let's look at crude oil. Everybody is familiar with crude. Everybody watches crude oil. It's probably the most highly watched market in the world, maybe alongside gold. And here we have, just, you know, follow along. You can read here on the side as I go through the chart. We have a new 52-week high on crude oil, daily chart of crude oil CL. Could be looking at USO if you'd like on the ETF. We have a 1, a 2, a 3, very small 1, 2, 3. So you might have to be, you know, quick to the catch or quick to the chart on this one. 1, 2, 3, very short. The market breaks down. It moves very quickly, reaches a $3 move or $3,000 a contract in relatively short order. Okay, how do we know that? The distance between the 1 and the 2 is our initial target. The market trades around here range bound, and somebody could say, well, what, isn't this a 1, 2, 3, 1, 2, 3? Yeah, it certainly is, but it's range bound. We're on a daily chart. We're looking for 52-week highs or 52-week lows. So right now, to me, this is just noise. We've already taken profits here. This is noise. Let the market figure out what it wants to do. And what does it do? It comes back up and makes a new high, makes a new 52-week high, surpassing this. So this is a new high. We have a new setup. All right, we're on alert. 1, 2, 3. Again, very, very small. 1, 2, 3. The market breaks down below. You get multiple retests. So if you're working a 9 to 5 or taking care of your kids, doing whatever, and you missed maybe the first couple times, don't worry. There's plenty of times to get in. The initial target is $4 a move or $4,000 a contract, and it meets that in really relatively short order. Now, this trade actually went on and moved over $20,000 per contract, and we took this trade in our service. We didn't capture the entire $20,000 move, of course, but we made thousands of dollars. Our members made thousands of dollars trading this pattern, shorting crude oil, buying put options, selling call spreads, and crude oil futures options, and USO options. All right, so trade number 2, same rules as this one. All right, so the market's moving lower, and we're in the trade, and then we're starting to look for a potential reversal pattern using the 1, 2, 3 bottom pattern. Here we get a 1, 2, 3. So we're looking to get long above this area, right? We got a nice little triangle pattern, which would be an extra confirmation. Another one of my favorite patterns. The market trades lower, takes out the number one low. The pattern is voided. That's cool. No worries. Market moves down, finally establishes a low and says, hey, I'm ready. I've stopped moving lower. I'm tired of moving lower. I'm ready to go higher. 1, 2, 3. The market breaks out and ends up moving $5 or $5,000 a contract, meeting the initial target. Initial target is the distance between here and here. Again, this could be $40. This could be $45. It goes up to 50. It doesn't matter what the price is. Pretty clear, pretty simple, right? All right, so should be clicking. Let's look at another one here. Market number 2, gold. Again, whether you trade GC futures, GLD, trading CFD, it doesn't matter. Now, this is GLD, the ETF. It looks really spotty, and that's because it is. I prefer to kind of back into these and start with the futures markets because they trade virtually around the clock, and you're not going to get all these gaps. It's just a cleaner chart. But whether you're looking at ETFs or futures, it doesn't really matter. You're going to see the same setup. So here we have a 52-week high on gold, GLD, 1, 2, 3. The market breaks down, takes out the number 2 low. We get a couple of retests here, moves down, reaches a $4 profit objective. Okay, here's where we don't care about what analysts are saying, talking heads, all these so-called gurus about where they think gold is heading. I don't care. I don't pretend to try and tell you, well, gold's going to go $1,300 an ounce. I don't care. I don't know. And anybody says they do, well, congratulations. So here we come down. We stop making new lows. 1, 2, 3. Another small double bottom. We break out above the number 2 point. We're signaling a trade to get long. It's a short target, short move, $2. And what happens? That's where we don't get greedy. It reaches our target objective, and then it trades sideways and sideways and sideways. We're not doing anything in all this area. All right, so the market decides to reverse, start moving lower here. We have a new 1, 2, 3 bottom. 1, 2, 3. Everybody see that? We'd be getting long above here, but the market makes new lows. So it voids the pattern. We start the count over. So we have a new number 1. 1, 2, 3, right? So now what do? We don't start getting long, getting antsy. We just remain patient. The market gaps higher. You wouldn't have seen this gap on a futures chart because it's trading around the clock, but no worries. It looks like the market's going to run away. We don't try to chase it. We look at other markets, or we wait for the market to pull back, and that's exactly what it did. The market pulled back, gives us a couple of opportunities here to get in. We can draw a little trend line here to add the confirmation, and then that's where we get long gold futures. We sell out of the money put spreads. We buy calls, or we buy call options, right? Bullish call spreads. The market reaches target at $4, and the market continues to go higher. So if you're trading multiple contracts, again, I'm sure the par SAR would have kept you in, basic trend line, whatever your method is, Fibonacci numbers, what have you. It's a good trade. All right. All right, for my Forex traders, this is a 4-hour chart of the CAD Swissy. CAD Swissy on a 4-hour chart. This is a multi-session low here, down here at the bottom, new number 1, 1, 2, 3, nice clean pattern. We break out above the number 2. That's for the aggressive traders. If you wanted to work a buy stop, boom, you're in the trade. Again, I prefer to wait for the trade to pull back. So I've got limit orders resting here. We're now long, reaches our target objective of about 70 pips. All right, the market's moving around. We get a new multi-session high. This is a multi-session high. This is a multi-session high. 1, 2. We don't get it. We take out the 1. We start the count over. 1, 2. Don't get it. Takes out the session high. We wait. We get a new 1, 2, 3. Kind of a smaller 1, 2, 3 top pattern. But imagine, I mean, how many currencies are there? You know, I watch 30 to 35 liquid futures markets. probably an equal amount of current Forex pairs, and then hundreds, if not thousands, of stocks. So these things are setting up all over the place. 1, 2, 3, breaks down, gives you a couple potential areas to get in if you were late, and reaches the 40 pip target. What happens at the 40 pip target? It reverses. I don't know what happens next, but it's very important to not get greedy, take off some of your size at the initial target levels. All right, let me take a sip of water, and I see lots of questions coming in. Everybody following me? Thank you, Nina. Thank you, David. All right, everybody is good to go. All right, day trade. Got to throw a day trade example in here. This is a 5-minute chart of the NASDAQ futures. Multi-session low. Again, what I mean by, not a multi-session, a session low. What I mean by a session low? For me, that's going back to just the Globex session. I'm looking for new lows or new highs in the session. So is it the lowest low of the session going back to 5 p.m.? Let's say I'm looking at, this is 8:30 in the morning or 11 o'clock in the morning. Doesn't really matter. Me, I start looking at intraday charts around 6 a.m. my time. Very quiet. There's really usually there's times for a couple of decent setups before the cash market opens, and then there's usually good for maybe 1, maybe 2 setups for the rest of the day. I don't really trade from 11 to 1, and then in the afternoon, occasionally after we made new session lows, new session highs, we may get another setup. 1, 2, 3. We break above. We get in on the retest here. That market moves up 13 points or $260 a contract. We make a new session high. 1, 2, 3. We break down below, get a couple of retest opportunities. The initial target is 20 points. The market trades range bound for several, what is this, a 5-minute, maybe an hour or so, I don't know. Finally, the market breaks down and reaches the 20 point or $400 a contract target. New session lows, 1, 2, 3. Market breaks above and closes. If you were good enough and put resting limit orders, you got the retest. You got the retest. Zip, 30 points or $600. This is the same day. The target is the distance between the number 1 and number 2 point. Nancy. But again, I like to see some movement. So again, S&P, NASDAQ, crude oil, 30-year bond is pretty slow, but it provides some decent setups. Euro currency, yen, things like that. So why are you here? You're here to learn my mechanical done for you strategy. I know it's kind of redundant and we've already been through this, but I'm not sure if it gets any more mechanical or simpler or easier. There's really no guessing when to get in, right? No guessing where the market is headed, no guessing where to get out. If we had 100 traders looking at the same chart, we should have at least 99 seeing the same thing, because there's always going to be one oddball out there that's going to overanalyze and say, no, this and that. And I'm just kidding. But it's not rocket surgery. Not rocket surgery, and I hope that you understand that. So is that enough proof for you? Enough proof? So is the training for you? If you're new to the markets, if you're brand new, brand spanking new, this should make sense. If you're an experienced investor or trader, this should certainly make sense. If you want to supplement or replace your income, looking to make additional money, if you need a specific step-by-step plan and want to avoid learning all of this on your own, then this is for you. This is something anyone can do, even very part-time. And not to knock my wife, but she knows nothing about trading. She teaches ballet, and I've showed her this and say, look, does this make sense? Does it make sense? You have to tell me yes. And it did. So I did my job there. All right. But wait, the famous last words, but wait. What if the strategy was automated? What if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and the target were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? It could alert you to a pending setup or even alert you to a triggered setup. That would be pretty amazing. So I've got a special offer for today's workshop attendees. I want to introduce the 3S code HighLow indicator and scanner for Thinkorswim, TradeStation, and NinjaTrader 8. The package includes my chart pattern principles PDF manual and trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and monthly member bonus sessions. Got to limit this today to 50 out of respect for support, which is me and one other person, and we personally manage and handle our clients and our students. But I want to show you something. Do you remember the examples earlier? Please tell me you do. Do you remember the examples earlier? You remember the daily crude chart? This is the 3S code HighLow indicator scanner. No more sitting here asking yourself, second guessing yourself. Is that the 1? Is that the 2? Is that the 3? Where's my target? I don't know. No more printing out charts and doing it by hand if that's what you still do. The indicator does the work for you. So do you remember the example? 1, 2, 3. See the little chevron signal or the stealth signal? That is indicating that we had a break below the number 2 point. That's just another visual saying, well, you're not guessing, did it break? Well, obviously it did on this one. You can see it's pretty clear. But if you needed some extra assistance, maybe right on this trade or even this trade, it will print the breakout level for you. What does it also do? It gives you the target. It prints the target levels. 1, 2, 3, boom. You're sitting 1, 2, 3, boom. The market moves lower. Remember this little exercise that we did? The market moves lower. The green arrow is the 1. It's showing you, hey, we're making new lows. We stop making new lows and we trade higher. The red is the number 2. All right, we got a 1 and a 2. The market stops making highs, starts making lows. We have a 1, 2, 3. Okay, we're ready to get long. The market makes new lows, voids the pattern. We start the signal over. Here we go again. Remember this? 1, 2, 3. Starting, we're waiting to get long here. Market trades, blip, takes out the lows. We start over again. 1, 2, 3. Here we go, folks. That's our trade. That's that third example that we've already looked at. So you remember the gold. Remember the gold example. 1, 2, 3. Hits the target. Boom, boom, boom. Nothing. And we get a lot of stuff right here. It looks kind of junky. Man, look at all these arrows. It's just telling you, hey, we've got some potential setups down here. We're making new lows. We're getting ready for a new setup. And so, I got tired of doing this just by hand, and not really by hand, but just, looking at it and going, hey, I can spot these. I can spot these myself. I really can. It's just kind of second nature. But I said, I want to build something where I can share with my trading buddies and my clients, because this pattern is just too good, too dang good to not have this automated. Take advantage of technology. So new 1, 2, 3 arrows will print as the market makes new highs or new lows. So over here on the right, it's starting to give us a new top pattern. So it's all auto plotted for you. All right. Again, the NASDAQ trade, the 5-minute NASDAQ trade, 1, 2, 3. We break above, market reaches target, 1, 2, 3. We break below, market reaches target, 1, 2, 3. Now, you can set up you can set this up on multiple markets, multiple time frames. If you want to put a 5-minute next to a 30-minute or an hourly next to a daily, and see how these things are setting up in real time, that's fine. Not going to change the indicator. They don't disappear and reappear and repaint. And I don't remember kindergarten, but I do remember my primary colors, learning my colors, red, green, and blue. And I remember learning to count to 3. 1, 2, 3. That's really about all you need to know. Now, it gets even better. Remember I told you, why do all the work? I asked, why do all the work when we have scanner functions that can do it for you? This is a real screenshot of my charts or my platform on TOS. I've set up my scanner. I've got multiple watch lists, 1, 2, 3 tops, bottoms. Here's a 15-minute for the futures, 4-hour Forex top. You put in your variables. I'm gonna look for 1, 2, 3 tops. This example, we'll look in the Russell 1000. I only want to see optionable stocks that are optionable because I like to trade options on these setups. Minimum, I want to see $20 or greater share price. Hit scan, boom, gives you the list. So now we all know that there's no crystal ball, but we're all big boys and girls, you know. But this really is like my crystal ball. It is my bread and butter strategy. We do 4 things. We scan the markets, we look for the setup, we know our entry, we know our exit. Everybody agree with that? So I call this my personal crystal ball, or damn near close. So if you're ready to profit from these predictable patterns starting now with the 3S Code Pro package, again, first 50 spots, you're going to get the 3S Code HighLow Indicator Scanner, Thinkorswim TradeStation NinjaTrader 8, Chart Pattern Principles PDF Manual, cheat sheets, 25 top option strategy guide, VIP email support, monthly member bonus sessions, and I'm throwing in 90 days access to my SST Pro Trade Alerts. You can receive those via email and SMS. We're not giving it to you for $19.97, $14.97, or $9.97, but for $2.97. Seasonalswingtrader.com/pro, and I do mean the first 50 spots because I want to be able to make sure you're all taken care of. And let me put the offer link in the window. It's seasonalswingtrader.com/pro is the offer. Renee, can you post that for me, please, if you don't mind? I'm not sure if it went out. All right, thank you. So the 3S Code Pro package, $297. It is a one-time fee. There's no hidden costs, hidden auto renewals, anything like that. You own the indicator and scanner and package for life. All the other resources that we're talking about here, you own it for life. One-time fee, $297, and it includes 90 days access to the SST Pro Trade Alerts. So if you want results like this, the 3S Code was responsible for this amount of profits in 2018, swing trading 2 contracts using the 3S Code alone. So let's go through the bonuses again. You get a chart pattern principles trading manual guide going through all kinds of things, whether you're a beginner or expert, options, other high probability chart patterns. Bonus number 2, 25 top option strategy guide. Again, we like to trade options in our service. We trade the underlying and we trade options, but this will show you a multitude of different option strategies for those that want to learn more or just start with the basics. And then bonus number 3 is the 90 days access to the SST Pro Trade Alert service. You can expect 3 to 5 trade ideas per week. We actually send a scan update every Sunday with kind of our watch list based on our proprietary seasonal scanners. You get the entry exit dates, projected moves, holding time, total number of years tracked with stats, stop entry target, and you get all that via email and SMS text alert. The SMS text is totally optional, not a requirement. I know a lot of you don't like to receive them. Again, totally optional. So the offer is seasonalswingtrader.com/pro. Please type in if you decide to join, because I want to make sure that you're handled and set up before we go into tomorrow. So make sure you get these scans. Ed and Susan are with us. Neil, Ty, thank you. All right, so these are some unsolicited testimonials, and this really what makes everything worth it. I don't ask for these things come in all the time. And here's this guy says, I've had all these and paid for my subscription. Here's a guy that sent in a screenshot of his platform, looks like TOS, a trade that we did in Campbell Soup. Here hit a home run with Campbell, up 77.75, lost 950 with AM, up 1300 for GPOR. Blah, blah, blah. You can read it. And these are the kinds of things that we get. So here is an example, or here are more examples of the trade alerts. These are just real snippets of our SMS text alerts. We give you the strike price, the expiration, the premium, whether we're buying or selling, and where we're taking profits on half a position. Here we're closing balance on crude oil. We've been stopped out of gold, plus 42 points on the balance. And we're with you the entire way. I'm taking these trades. So we don't say, hey, we like this and we like that, and good luck, best wishes. No, we're telling you where we're getting in. We're telling you what we're doing in the middle of the trade as far as management goes, and we're telling you where we're exiting. We're telling you where we're taking half off, maybe a third. We're telling you where we're going to close. We're with you the entire way. All right, cool. So this was just sent a few weeks ago. Pretty amazing stuff. This was just to kickstart off 2019. We're nicked out a few ticks on the balance of crude oil, balance of unleaded gas, and then the balances of pound and euro. And then our trades, we don't send out day trade alerts or anything like that. And typically our swing trades are, really just depends on market. It could be a couple of days to a few weeks or several weeks. But this one was really short. We initiated a trade on Friday. This went out on Monday. We initiated a long trade on Friday on nat gas, and then on Monday we had gapped up and we were up $3,600 a contract. Here, don't send out SMS text alerts on Sundays or over the weekend, but I did on that particular Sunday evening because we had the pending Brexit news, and I just thought it'd be prudent to go ahead and exit. So we were up, we closed out the pound, closed out the euro, just to get out of harm's way. So again, are you ready? Ask yourself, are you ready? I eat what I cook. These are real snapshots of my live trading accounts. Here in TOS, you can see I've got futures positions in nat gas, 10-year notes. We've also got positions in Dollar Tree, FXY, the yen ETF, unleaded gas, or nat gas ETFs. Here is a real snapshot of my futures account, crude oil options, cotton options, copper, yen, nat gas. And so I trade these alongside with you. Another example here, 5-minute trade on the E-mini S&P. This was on 122. A quick trade here. These are no trades. We didn't get closes. Did not get closes above the number 2. Didn't get close here. Didn't get a close here. Didn't get a close here. Finally, late afternoon, working our way lower. Higher RSI on the divergence. So I like the trade. We zip up. Market pulls back down. Don't know exactly where I got filled, but I made about 9 points or $450 per contract. So my time is running out. I want to go through this again. 3S Code Pro package, seasonalswingtrader.com Pro. Larry, appreciate it. Stefan, appreciate it. Robert, appreciate it. Lucinda, B, okay, thank you. Yep, we'll respond to you. Absolutely. We're going to take good care of you. All right, so we looked at, most of our examples have been on Thinkorswim. Here is what the TradeStation chart may look like. All these indicators are customizable, by the way. Here's what the scanner looks like. And then here is NinjaTrader 8. And I forgot to tell you, and shame on me, we've got some awesome things coming in the pipeline. We're constantly improving this thing, looking at new things to make it better. There's really nothing you should be doing. I mean, to be completely honest, it's great as is out of the box, but we're doing some things that are pretty cool, such as we're adding new levels as far as target, stop, and entry levels, more visual for you. We're adding price pop-up alerts and price audio alerts, and we're adding second and third target levels as well. So that's pretty cool. Let's take some questions. Are there any questions? Yes. Let's see here. All right, Bruce asks, what happens after 90 days? Well, you get the indicator and scanners for life. You own them. The alerts expire after 90 days unless you wish to continue on a monthly or quarterly membership. Newt says, do I offer any other strategies to accompany the system? There are additional patterns and setups in the PDF manual. They're all very historical, reliable setups, all price action based. Patrice asks, can you run multiple scans or watch lists at the same time? Absolutely. Yeah, I've got multiple watch lists and scanners going on at the time. Do I use stops? Absolutely, of course I do. Always use stops, whether I'm trading the underlying or options. Bernardo says, I don't trade options, can I still use the alerts? Oh yeah, yeah. We've got many students trading the underlying, just buying the stock, buying the futures, shorting futures. It's going to kind of depend on your capital situation, your risk situation. If you can, afford the margin with whatever account you're trading. We got guys and girls trading anything from a $2,000 account to $200,000 plus account, where a lot of them are actually just buying the stock. So if we say, hey, the 3S code pattern setup, or not all of the alerts are based around the 3S code, but a lot of them are. And so if we say, we like XYZ stock, here is an option idea. Here's what we think is a high probability option idea. We're going to sell an out of money put spread and collect credit. So that way, if the stock wants to kind of drift around and not really move, we can still get paid a lot of the times. But if you want to take that and say, okay, he's clearly bullish or bearish this, I'm just going to buy it. And that's another way to skin that cat. Do I have a trade room? No, ma'am. Sorry. Can you load it on multiple platforms? Yes, sir, Carl. Does it work on Ticker and Renko? Yes, Jeremy. Nathaniel says, I'll try this for day trading. That's cool. The monthly service is $97 a month. Uh-oh, somebody says I don't have sound. Oh no. Can anybody hear me? I hope I haven't been talking into a black tunnel. Can everybody hear me? Audio check. Okay. I'm starting to get concerned. Let's take a look at I told you to look at it reminded me, thankfully. Can everybody see my 5-minute chart of the E-mini S&P? All right. Whew, about to have a small stroke there. All right, so you can see the chart, 5-minute chart of the S&P. I've got a few minutes left. All right, so this was Friday's action, and we had a couple of setups. So again, like I said, I start, my day around 5 or 5:30 in the morning, and I'm looking at email, looking at the market, seeing what everything's doing pre-market. And here's a 5-minute chart of the S&P. And so here I'm in front of my computer, and I say, okay, I've got a little setup occurring here. Multi-session lows, the new lows for the Globex session. You would agree with me. We have a 1, 2, 3. The market breaks above the number 2, or actually, I'm sorry. This pattern is voided because we have new lows. 1, 2, 3. So we have a new setup. The market breaks above here. I don't take the initial breakout, but I put in resting orders. Now the price action is trading above the shorter term moving averages, which helps give me confirmation. And I get long here, and the distance, or the target, is the distance between the high, the number 2 high breakout, which is about 92, the low of 87. So that's 5 points. So we're going to measure up 92 plus 5 is 97. Basic arithmetic, 92 plus 5 is 97. Boom, and the market makes a high of 97 and a high of 97. Imagine that. Imagine that. Reverses at the 200-day moving average right here at the cash open, comes down, gives us a new 1, 2, 3. Doesn't trigger. We make new lows, new setup. 1, 2, 3 here. This is, you can see that it broke above the number 2 by 1 tick. But we don't take that. That's why we don't take that. It got the suckers in, shook them out, and stopped you out if you took the initial breakout. Doesn't always work that way, but that's the way it works. 1, 2, 3, we get a new session low. RSI is gauging higher. just an extra confirmation. 1, 2, 3. The distance is the target is the distance between the 2 and the 1, which is 10 points. So we 90 up to 2,700. Notice how it gives us our target level. We break above, we get a couple of opportunities to get back in, and the market comes up and gives us 10 points or $500 a contract. Crude oil yesterday, 5-minute chart. This was at 4 or 5 a.m. was not up, didn't look at it. Here we have a 1, 2, 3. The market breaks down below the number 2 point on this big bearish bar at 52.75, retraces back up, gets you in on a limit order at 75. What's our target? Simply the distance between the 1 and the 2, 25 ticks. So we're looking for 50.50. Market comes down, gives us 52.50. 25 ticks, $250 a contract. Pamela, shoot, just email me if you got questions there. All right, so again, here is the slide. I'm running out of time. And the 3S Code Pro package, $297 today, seasonalswingtrader.com/pro. Let me type in my email for you, Pam. All right, there you go. Stop loss is initially below the number 1 on a long and above the number 1 on a short. To me, it's very important that you put your initial stop loss at that level. You've got to let the market move. You got to respect the market, let it move. It's not always going to just zip or zoom right to your target, but more often than not, you'll be surprised that once that puppy triggers, it's going to move to that initial target. Once it starts moving into your favor, quickly drag it down or drag it up. I like to tuck it behind the number 3. Or again, draw you a simple trend line. And we talk about some of those things. We've got resources in the members area. Renee, I think I've got a couple minutes. Let me go here. This is the members area. When you log in, you're going to see, go up to products, you see SST Pro, SST3S code. So SST Pro is the alert portion of it. You're going to have a welcome video. We're always going to be adding things. We send a weekly video update every Wednesday. Here is where you're going to find our open and closed trades as well as our scans. So here's a scan update that we send every Sunday for you to view at your leisure with all of the relevant details. These are not trade recommendations. These are just ideas for you based on high probability seasonal statistics. Open trades, open futures. Here is what you can see what we've done for 2019, where we closed our equity trades. So you get a whole archive. 2019 futures. This is what we've closed. So we've closed $22,483 in futures. We've got one open position in cotton, and then you can see we've got other open positions that we've initiated in February. You can go down here and check out the archive. We've also give you a symbol guide, and this is a work in progress. I'm giving you some mini contract ideas, but we respect and understand that not everybody trades futures or commodities, so we give you alternative symbols to trade ETFs. But again, we trade all markets, equities, futures, currencies. It doesn't really matter. Let's quickly go through to the 3S code membership area. My computer is moving slower than molasses. Thank you, William. Yes, Sal, the updates are free. Any updates that we're making, trust me, we're making updates. We're going to make this thing bigger and badder all the time. Doesn't really need much else. It's really going to come to a point where you can't really do much else because it's just that black and white. So you're going to see bonus materials. Here's where we're going to be adding some things, but here's some ideas on trading the signals, customizing the indicator. Here are your other resources. PDF manual for installing on Thinkorswim, videos. Here are your studies, and here are your scanners, and here are your studies. We've got two different sets of scanners. Those, if you only want to see for those setting up, and if you only want to see those triggered. TradeStation version 10 and 9.5, and then NinjaTrader 8. Randy, yeah, shoot me an email and I'll take care of you there. Hang on a second. All right, let me send that. And Charles, same thing. All right, guys and girls, I appreciate your time today. I hope you learned something. I really do. Hope you learned something. Hope that this can really simplify all the things that you're doing. To me, I like to wake up, have a process, not worry about all this discretion and other variables. Well, if X crosses Y and I hear this zing and that zang and these colors match, then I could maybe get in, but I'm not sure. Pretty simple, pretty simple. So I really appreciate it. Great crowd. WebEx, Renee, thanks for having me. Everybody have a great weekend, great Saturday. I'll get right to my support. Look forward to working with you and seeing you on Sunday and next week. Take care. Have a great day. Talk later.